Good afternoon. It is Wednesday, August 19th. It's 8:49 p.m. at the time of this recording. Let's get into what happened today. So I'm going to go ahead and start off here with bonds. So today, Scott Bessent announced that they're going to be doing buybacks here from $2 billion to $4 billion of each round until November 4th here. And basically, that's what moved most of the market today, besides the short squeeze here on the biotech sector. And we'll get into that later here in the video. So obviously, we saw yields, or excuse me, rather bonds drop down here. And basically, why it moved here, kind of in layman's terms, is that the government borrows, right, by selling IOUs called bonds. Okay. Today, it doubled how many it can buy back, right, from $2 billion to $4 billion. That's a big key factor into why different sectors went up today, like gold again, which we'll talk about here later in the video. And right, what does this mean? Buying its own bonds pushes that interest rate down. Lower rates does what? It takes pressure off the stock market, so stocks rose. So kind of my own tinfoil hat read here is that buybacks run into November 4th, the day after the midterm elections. With national debt near $40 trillion, they're holding interest rates down on purpose. Why I find that interesting is, right, I'd have to do some fact checking here, but I couldn't find anything on the web if anybody does see or know anything about that. I'm not claiming to be a bond expert. Nothing I say is financial advice here. I find it very fascinating here that, right, we're having the same exact issues here that we saw in 2007, and we keep saying that things are different even though we're not, right? Actually, back then, I could argue life was a lot more, life was better for a lot of people. Things were obviously cheaper. People weren't stressed with their jobs. Jobs typically were doing better here. But over the past 2 decades here, right, things have gotten progressively worse, right? We have all this AI, all this different infrastructure, all these different things here, and things are allegedly better according to these companies. Well, for who? You as the consumer or you as the company here, right? So again, kind of in a nutshell, right, what happened today, right? They were purposely doing what? Holding interest rates down when Scott Bessent made that announcement here. And it's conveniently running into what? Midterm elections, which typically throughout the years, we do see a bit of drawdown here heading to mid-year election terms. Going over here to gold real quick here, right? Why did gold move up here and catch a bid all of a sudden? And you can kind of see when stocks just catch a bid out of nowhere, right? So you have dead tape, right? So go ahead and use this tool here in TradingView, your price range here. So basically, wrong one. Go over here to the date and price range here. So basically, gold was barcoding here for the past 55 days, and then just miraculously, right, as if somebody knew here, on Wednesday, August 5th, right, to start buying gold. Why? Right? So a lot of people think that retail kind of moves the market, and it doesn't, right? Market makers do what? They move the market. Okay, that's smart money versus dumb money 101. So, right, why did gold move, right? Gold pays no interest, so when the government pushes bond interest rates down, bonds look worse and gold looks better by comparison. When the government floods the system with money, people buy hard assets like gold to protect their savings from losing what? Value. So right here, kind of the high-level thought, the hollow point thought here is gold and stocks rising together isn't, whoa, we're all clear. It's a bet on more money and a weaker dollar. And heads up, guys, right? Weaker dollar means what? Gold goes up. That rule is also unreliable as well, but typically that's what people were saying. The theory kind of ended right when gold just shot up here all the way to 5,500 and the dollar like barcoded at $1 here. So sometimes there is a correlation between the dollar going down, which it did go down. Looks like today I thought it was 2% here. I could be wrong. It did go down 2%, I believe. I don't know what changed here. It said 2% that was down today, but whatever. Going over here to the Nasdaq here. Yeah, risk report up here and a kind of a resistance here. What I see here is just a possible uppercase H off a Morningstar reversal here. So if you go ahead and just lower your time frames here to see things more clearly, I like to use 1,000 ticks. That's my go-to. But again, if you guys know me well in the Discord, I like to use all my different time frames here. And I'll go ahead and chart some things for you guys in real time to show exactly how I find a setup and exactly how I use my levels here, since a lot of people have been requesting that here. So right here, looking at the 1,000 tick time frame, I don't really see anything. This just looks like a messy chart here. Really, nothing's clear here. I could definitely name out some structures here, but overall the chart's messy here. So I'm going to have to go to maybe a 30-minute. Maybe we'll see something more clear. No, you don't. You just see a lot of wicked candles here, dating back here to the start of the session here with the drawdown, then obviously just gapping back up here to open, which I believe we did do. Then we rejected off of that today, which is why we finished flat. We are up here 0.5% here in after hours, so we did break above our opening price, which is around 550, and now we're over 648. So we are over our previous day open, which is good from a long-term perspective. The concerning part here for the Nasdaq is we did create a lower high here for the third consecutive day in a row. We still have our 55 EMA institutional support. We do see RSI rolling over here, which you don't want to see. You typically want to see RSI pushing up here, right? A good rule of thumb is once RSI is over 70, you don't want to see that crack. Usually when it cracks, you want to get out. And obviously, right, time frames are relative here. Also, right, RSI, rate of change here. All these indicators aren't, magic 8 balls, including candlestick chart patterns. But when you put these things together, right, things start to make a lot more sense, right? And I like to go macro. Again, the what, the why, fundamental, right? The use case for the stock, and then technical. Technical is the chart that we're talking about right now. And I also go, right, index, sector, stock, which we'll get back into later in the video, and why this key analogy here is very important. So again, there's going to be people saying that there's a gap here. There's no true gap here. One of my favorite charts to show people the mistakes they might be making, saying there's a gap that needs to be filled. If you just go over here again to the 24-hour time frame, anything under 24 hours is going to show it. You see that there's no gaps here. So there's a very, very key distinction here. Some of these very small details here will help you, right? Hopefully, avoid making mistakes or like saying there's a gap that needs to be filled here, when in reality, there is no gap that needs to be filled here as well. So we're going to go ahead and chart something like this here in real time. So showing you how I use my setups here. So we're going to go ahead and just clean the chart off here. We're going to start clean here from the daily time frame here. And right, how you're supposed to use Fibonacci's is you're going from the swing high to the swing low. Some people do it differently here. Again, I'm not saying the way that I do is correct, but I'm showing you here in real time how I chart setups here and how I take trades using something from a technical standpoint. So I'm going to start here from the longer term perspective here, right? The way I like to view the Fibonacci levels here is, right, this, me and you have ownership in a company, okay, right? If somebody's above it, right, somebody's in control, right? So that's a bull and that's a bear. That's from a 50% line. Why I like the 50% line here, right, and I don't just use it on the daily time frame, I use it from the daily all the way down to the 1 minute time frame, is because it shows you different things, right? So obviously from a longer term perspective on a daily time frame, we are bullish here, right? And one other thing here, just observing the chart without getting too technical right here, before I lose some of you guys, is where are some really good key zones to get involved with. You can kind of visually see it right here. So a lot of people, right, they're going to get involved like right here, kind of in the middle of a move here, whether it's overnight, whether it's open here. I'm going to get involved right on that exact level or as close as I can to have a really good setup to where if I need to strangle, I can adapt and or change my position here in real time. So using this price tool here on TradingView, right, you can see right here when you get to this level, how far do you approximately go up here before you gap down? Do you go up? Do you go down here? Again, it's not just using these Fibonacci's, combining kind of all different time frames, the macro, the fundamental, the technical here, right? What days did you go up here, right? Maybe research and back test, like why? Was there anything notable that was happening up here, right? On these days where you kind of gapped up? So that's one thing to kind of pay attention to. So, right, approximately here, how far do we go up when we're on this level? I'm just going to call it right here. So we go approximately 1.6%. Again, using the daily time frame from a macro perspective, how far do you typically go down here? Or how far can you go down here before you stop? Well, it actually looks like you go all the way back down and retest that 50% line here, right? So that actually looks like a decent actual 50-50 here, which is why I like it, right? And why? Because the market is tilted against you. It's not enough, right, that we obviously have market makers and ridiculous headlines where stocks squeeze, and they have ATRs, which is average price range or average true range. There's different terms, daily ranges and so forth. It's not enough, right, that we have all this manipulation here in the market. I don't want to get involved in a stock here. It's not about having a falling knife or all these other candlestick chart patterns. It's what am I looking at here? How far can I go up from this level and how far can I go down, right? This is just using Fibonacci's. We're not using anything else right now, okay? Fibonacci's and price range tools. So right here, we have our chart here. We have our level here. We had the level here that I mentioned we had the whole yesterday. It was actually 717.70 here, which we did break here, and we did gap down below it. We retested. And another concept here that I don't believe is too technical is an undercut and retest here. So right, when you get back to your level here, right, are you going to undercut, retest this level here, and you would see a retest if you were to drop down to a smaller time frame, which I'll do here in a second, gap back up, or crash on down here. And again, really good levels to get involved with here. You can kind of see what happens when you get to this level, right? You go down, and I'm not saying you're going to go down or up on these levels. It's that you have a really good idea. Instead of getting involved up here buying calls, You can wait for a specific level here. Sometimes I get it, it happens overnight, but there are clues here with candlestick chart patterns that you can identify these trends in the way you should trade and the way I trade, okay? So again, a really good level to get involved with down here. Your clues over here, you had dark cloud cover. I personally took puts, I called out puts. I don't really believe in swinging anything overnight now. I think the moves are too volatile for most traders. I tell people if you have less than $5,000 in your kind of brokerage account, obviously none of this is financial advice as well, you're gonna have a very tough time stomaching holding whether it's calls or puts here when you're having moves overnight on the Nasdaq and other indices and sectors and stocks individually going up or down 7 or whatever % every single night. That's not something I want people to kind of be involved with. I want to be able to read the chart here in real time, and when it's justified, getting involved here on a stock actually going long when I see an actually good setup here. So right here from this level, right, we obviously came back down here. You could have used these Fibonacci levels here to kind of correspond and validate that. And going down here to a shorter time frame, let's go here to like maybe the 15-minute. You can see these levels a lot better here, right? So now you can kind of see more clearly here. Where do you go up and down? Oh, a wick above, trap you, right? Come all the way back down, right? So again, using these two tools here, right, can really give you some levels. And this is exactly how I chart what I preach, what I have videos on every single day. So hopefully this is helpful. And again, you can use your EMAs, you can use all these other things, but EMAs are determined by what the price is doing here. So I don't need something that's lagging, or technically, right, some people can say it's not lagging. I just think it is lagging. When I can look at the chart patterns here in real time and draw my Fibonacci's, I'm Gucci, I'm good. And that's all you truly need. You don't need 10,000 different indicators saying buy, sell, buy, sell. By the time it says buy, sell, you could identify that right down here, maybe by a chart pattern, maybe by your levels you should have gotten involved with here, rather than an EMA crossover with like a 520 saying, oh my gosh, you're going up here. And it's like, no, it's too late, right? By the time, right, you go up here, right, you might have a pivot here. If you draw a fib from this swing high to this swing low, showing, oh, what, we're going to reject here because now we rejected a 50% line and kind of so forth. Going over here to SPY, I have my levels here for tomorrow. Your call wall clearly is up here at 772. Your point of control is what you're trying to hold right now at 769. And then your value area low, your put wall is down here at 765, which is your flush zone, okay? So again, right, you had a undercut, you retested, you broke down here. Are we going to be able to break up or break down? And visually drawing that here, what does that look like? Okay, undercut. Well, obviously you did retest at SPX, I believe today, 7739 here. And then you broke down later in the day. Are we going to gap up? Are we going to gap down? What are we waiting for? That's where you have to look and pay attention to. Do we have data coming up, right? That's macro. What fundamentally is happening under the hood? And then again, from the technical perspective, what we're talking about, what is happening here right in front of our eyes? Okay, we have our candlestick chart patterns here. You can't see them because there's a gap. Remember what the trick I told you, right? So right here, we obviously see an evening star. Let's go ahead and mark it here. We have what looks like appearing to be a morning star here. So far, it's a weak breakout. It either is or it isn't going to be a morning star here. Right, so you have to be unique with how you see chart patterns. They're never going to be the same. Sometimes they look very similar here, but again, right, it either is or it isn't going to be here, right? If this breaks down, right, this is going to break down off of a what? A bearish engulfing candle, which of course coincides with what? Not every time, but typically, right, an evening star, right? These are candlestick chart patterns. We can get into a different video here, maybe on Saturday, and do a deep dive to where we can talk about the actual chart patterns themselves and how they correspond and coincide with candlestick chart patterns. So going down here to the 4-hour time frame, we can see that gap that never existed. That's why it's very important. And right here, I kind of see a bullish pennant here breaking up. You can kind of see candles getting tight, tight, tight. So right here, visually looking at the chart here, I can see a control bar. What's a control bar? Some people call it a mother bar, and then it's categorized by inside bar, which is a higher low within the time frame. But again, this is a control bar controlling price here. This looks also like a bullish pendant, which is a chart pattern. Okay, so right, candles are getting tighter, right? It's controlling price here. Obviously, right, we're trying to figure out what we're going to do here on this time frame. Okay, but here, right, you can just see here reversal. Here's your stop loss. This is your low here. Okay, you have a chart pattern here, coiling. You're getting higher lows here, rather within this chart pattern here. You do have what appears to be another control bar. So control bar here, higher low, another control bar here, higher low, right? Are we going to break out or break down? And again, right, this is a 4-hour time frame. If we drop it down to a 2-hour time frame, what do we see here? Okay, that's not what I was looking for. Maybe like a 3-hour time frame. You can see a morning star here forming here and a possible 3 white soldiers chart pattern here forming, right? So 3 white soldiers is this, it's 3 candles. Typically I would like to see them bigger, but again, we're having a lot of indecision here in the market, right? So that's 3 white soldiers or 3 green candles. Really what I'm looking for is actual large engulfing candles that look like actual conviction, not rather indecision here. So we have our indecision candle here. You have to be unique here. It kind of gets confusing because you have a bar right here. Here's your bearish engulfing candle. Here's your doji. It doesn't always have to be a doji. It's always going to come in different shapes and sizes. It can be a dragonfly doji sometimes. It can be a gravestone doji. It doesn't matter. You can have long wicks, small wicks. Long wicks can look like this. Small wicks can look like this, right? Indecision candles. And right, what I'm looking for is an engulfing candle, right, that can take out obviously our opponent or call wall up here, and then maybe we can retest these highs and look to levels to the upside here. That's why we have to read things in real time, and why I don't care to get involved overnight. So many different things can happen overnight in the chart to where what you might get trapped when these candlestick chart patterns might reverse, which is just technical. But then maybe again we have some macro news. Maybe the war is not ending, which it's not. The peace deal that never existed, right? And then obviously, right, the fundamental use case for these different stocks here. Going here to a different time frame here, you can kind of see a better visualization of it here as well. So again, this looks like a morning star. Here you have your engulfing candle here. I don't view this as a wick up here. I just view this as one red candle. Okay, so I view chart patterns differently here. I view that as one red candle right here, one red candle. Again, you have one candle here, high or low. Doesn't have to be perfect, and I just drew it wrong here. But my principle right here is either we're going to go up or we're going to go down. Obviously, if we break this level right here, it can turn to something different, but we have to watch the chart in real time. What could you also possibly do? Create a bearish channel, what it sounds like, right? A bearish channel. A channel that's bearish that comes all the way down here. You might undercut again right here, retest, or come all the way back down here and create an inverse head and shoulders and gap back up here, okay? We did see a bit of rotation here into the Russell 2000. Let me just confirm that here real quick. I do have a long setup here that I'll be looking into tomorrow. I rarely play the IWM, but I also want to show you guys something here as well. Do you see how these charts are all the same here? That's why I tell people you don't have to overthink trades. Usually the charts are all going to look the same here. There's different tickers that are more expensive or less expensive. It's kind of what your appetite for taste is. And again, what can you do with these levels here? Figure out the true price range, like how far have been going down or up on a daily basis to where maybe it makes sense to get involved. Here from a chart pattern perspective, you have a left, you have a head, you have a right shoulder over here, you have a falling bearish 3 here, you have a failed morning star breakout here, right? You try to break these highs up here on this doji, right? It rejected all the way down here. This obviously right here is your resistance and call wall here, which was previously your support and put wall, right? How can you view support here, right? You rejected here, you didn't get quite back up here. You formed support, right? Came all the way back down here. You had to undercut, right? You had to retest, and obviously you broke down here. Now you're forming, right, what looks like a possible cup and handle, but again, right, you have to be unique with how you see chart patterns. If we were to go down to a shorter time frame, you could see that, and that would corroborate what I'm saying here. Large engulfing candle obviously got sold off. You created a lower low here, but now you're creating higher lows here. And again, no different from how I see the other chart. You have a control bar here, which is what? Controlling price, which is why what? Price has not moved, okay? Going over here to crypto and something that I want to really get into here. So we obviously had Bitcoin. We obviously had some different stocks here within the crypto space moving up here. But why did basically, crypto move in a nutshell? Not taking too much time here on crypto because I don't care about it, don't like it. Washington obviously rolled out friendlier crypto rules, making it easier to launch and trade digital tokens legally. It's basically the same bet as gold. People expect money in the system, so they buy Bitcoin too. Coinbase swings about 2 times as hard as Bitcoin, up and or down. And right here, the tell is, right, gold and crypto rising on the same day tells one story. More money coming in, right, and we do have a weaker dollar. But also you need to pay attention to, not everyone's piling to these risky bets here, right? They're getting involved in with different names here, like what's going to lead us to our next point, mRNA. So all you had here is a short squeeze here. I don't care about mRNA, to be honest with you. I had it on my watch list, and I just totally gaffed here. I'd be lying if I told you that I was going to go up like 100 and something percent, maybe like 10%, maybe 15%. It was in the healthcare sector that I was looking at that I did mention on the video the other day, which can be corroborated by you watching that video. But here, right, so what happened here is a short squeeze. So I'm going to go ahead and explain a short squeeze and why you just see ripping here up all day long. So how do short squeezes work? So basically, one piece of good news made mRNA explode 177% in a single day. Basically, right, betting a stock will fall is shorting. You borrow shares, you sell them now and pocket the cash, but you owe those shares back. So one day you must buy them again to return them. Here's the trap: every short seller is a forced future buyer. If the stock rises, they buy back higher at a loss up here. So people that were shorting down here, they're smoked. Pray for them, please, right? And a short loss has no cap. It can climb forever, right? The setup for M&A was a crowded short here. He had 50 million shares, about 13% of the tradable stock here, but that was short. And they only had a certain amount of days to cover that. So they had, right, that equals short shares divided by what daily volume is a pressure gauge for how jammed the exit is, right? It was very crowded. What happened here? Why did it go up? Good news hit. Moderna's cancer trial works. The stock jumps. Now everyone's shorts are instantly underwater here, okay? Right? Now the losses start to pile up. That's when you start to get margin calls. If you remember yesterday, I made a video and the headline was what? Margin call. The broker demands more cash to cover the growing loss, sometimes 2 to 3 days to wire it on a violent move. Sometimes it's the same day, right? So now, right, they're forced to buy, I guess. Well, if they can't pay, the broker buys the stock for you to close a bet at any price. Lenders can also demand their shares back, forcing the same buy, right? That's what that buying pushes the price even higher. All that forced buying is filled. The price climbs, which puts even more shorts underwater here, and basically it's a feedback loop. The loop feeds itself. More underwater shorts means more margin calls and more forced buying, right? Which means what? A higher price, round and round until the shorts are all flush. That's the actual squeeze. So the news was a spark, and they trapped shorts were the accelerant, right? It was just basically gasoline to the fire. It's getting explosive. And it also cuts both ways. Once the shorts are gone, the forced buying stops, and nothing holds the price up. So the other stock, and there's other sectors within the biotech space here that went up here as well. Why did MRK go up here? Again, that was on my watch list. I just missed the ball on that one. A major cancer trial worked. Merck and Moderna's new vaccine, paired with Merck's drug Keytruda, beat the drug alone at stopping skin cancer from coming back. Keytruda is Merck's #1 moneymaker. This hands it a brand new reason to keep growing for years to come. So what's the tell here, right? A drug stock led the whole market, while basically chip stocks fell. That's money shifting from one corner to another, the day in one name, or in this case, two. Something else I want to point out here is there's another stock here, which is BNTX here, and I did have a chart on here. I don't know where it went, but basically this is another stock here that basically is similar to Moderna here, but their trials actually failed here. Even though they failed, right, because it's closely related here to Moderna, right, they went up here 22% on the day. So sometimes you do see an effect in other stocks of the same sector doing the same thing, which is why I tell people we don't always have to trade the Nasdaq, this SPX here. When you kind of look at the index here like the stocks, which we're getting into right now, right, which by the way has lost 55 EMA institutional support, there's multiple sectors here to get involved with. So sometimes, right, people feel like, oh my gosh, I missed, I missed a SanDisk, I missed this stock, I missed this stock, I missed this stock. Well, if you pull up the chart here, right, here's the chart over here, right, there's other sectors here that you can also play here as well. So you have Western Digital here, which is gapping down. You had also SanDisk, you have Applied Materials, you had Caterpillar here. Well, how do all these things tie together, right? People would try to, play the Nasdaq here, using $300, $400 a day. Again, nothing to say here's financial advice. But if you were to look at the chart here, right, they all, right, you have layer 1, layer 2, right, the tool makers. You have layer 2, the chips, you have layer 3, and you have layer 4, and then you have like kind of sub layers, right? How are you going to build these data centers that are for the what? The chips. And who's doing what? Who's doing the building here, right? AMAT, right? So you have different sectors here and subsectors that all benefit off of moves here in the market. And right, go figure, right? When Caterpillar was dropping here, so did what? All of tech, okay? All of memory, right? And one of the key things that I try to remind people every day, kind of tying this back into the fundamental aspect and the macro aspect here is, right, when you typically have what? Chips that don't move, you either have a chop day, which we did have, or you have a down day. So what I've noticed here from a perspective of swinging is, if chips are not above like 7% on a day cumulatively, we're talking about AMD, we're talking about NVIDIA, we're talking about ASML and so forth, Western Digital, Micron, and so forth. Typically you'll have just maybe like a 0.5% move day, right? Which is really hard to trade, because once you get to 0.5% move here, like you do already have overnight here, it's very hard to scalp during open here when almost all the moves have happened here overnight, which is why I'm not fond of trading here. It's too volatile, too vicious for a lot of people to trade, including myself here. I always preach risk management and protecting your capital, and to me, protecting your capital means it's okay to trade these things at open here. We just have to keep an eye on what's happening under the hood, like, what happened today with Besant and the rates and the yields and everything else, the bonds, to where, right, we can find really good setups and really good entries. We don't need to rush into these things overnight. right? What is the risk and what is the reward here? I'm risking a lot of money here on a daily basis, swinging things overnight, which is why I haven't been swinging things candidly. Going over here to different stocks here, we're going to go back here to crude oil. Crude oil really is just cooling here. You don't really have anything happening. You kind of do have like a cup and handle here that's forming here, but you do have your resistance here. If you just go back to most of my charts here, when you meet your resistance here, what happens? You typically do what? You fly once you get past your resistance, because from a Fibonacci perspective and just from a technical and overall, I mean, I'm not trying to be rude, just a common sense perspective here, right? What is going to happen once you get to this point here? This is going to be your new base. What's your base? It's your support here. So, right, your support turns into what? Excuse me, your resistance turns into what once you capture that? Support. So where's your resistance? Clearly from the visual level here, right here. Maybe a really good place to get involved with going short and long for a strangle here, right? So once we claim this as support, right, and again, crude oil is more one of those more macro things controlled by geopolitics here, things will start to look easier and better for you trading when you think that way, right? I don't need to get involved down here. I don't have to get involved down here. You don't have to catch an actual bottom tick, even though I joke about it sometimes. You wait for the right setup, you get prepared, you do it once, you do it right. I don't want to be sleeping with one eye open over here because I'm getting involved in stocks here that really, again, from a macro perspective, I just have no idea what the hell is going to happen tomorrow. We might have another piece deal tomorrow morning. I just don't know, right? You know, if the market going back over here, tying everything together, you see clear manipulation of the market, right? Holding interest rates down. And also, what does that mean, by the way, when you're holding interest rates down, right? Are we going to get any rate hikes that people were panicking about before? Maybe, maybe not here. But, right, that takes a lot less pressure off of different companies. Because why? Right? What do low interest rates mean for people? Low interest rates mean what for a lot of companies? And usually, right, people think about houses, they think about car loans, but, right, think about these big boys. That means, right, if you have a financing loan here for like 9%, 10%, you have to fact check me on this. I think NVIDIA's at 9% for their loan, right? You're just paying a lot more every year. If you can refinance this, right, or not have a rate hike to where you might have to refinance it, that means what? You're saving billions of dollars year over year to do what? Spend more money and invest in your own company, do buybacks like they do, which helps with, you know, dividends and so forth. And overall, you have more money in your pockets, which helps your pocketbooks here when it comes to earnings and revenue. It's a sneaky way to get revenue and really good numbers, really good looking numbers here on your earnings reports. Going over here to the stocks again, right, we have our 55-day daily EMA right here that broke here, but I think currently in after hours it was here at 538. I could be wrong here, but now it's all the way back down here to 527 here. So, right, I always like to pump the brakes here when we break our 55 daily EMA. What is this telling me, right? Institutionals are doing what, right? Simply, they're not wanting to get involved. What does net buying look like above your 55 EMA? This is what net buying looks like. What does net selling look like, right, below your 55 EMA? And if you draw your fibs from the top to the bottom here, work with me here, okay? Usually it does coincide here, right, with this level right here where your 55 EMA is. Obviously, you've been having very, very extreme movements here in the market, so it makes it a lot harder to see these candles here. And again, one of the key concepts I like to go over right here is what? Look at the chart right here. Is that a gap? That's not a gap here. What do you have to do? Go to a smaller time frame to see what? There was truly no gap here. What do I see here? A possible morning star here in real time. Possible 3 right soldiers, but again, I have a control bar. What's a control bar? Something that's doing what? Controlling price. Categorized by what? Higher lows. So now you're just barcoding within this range. From a 4-hour perspective, we do see this rate of change here flipping up here in real time. This is good. Usually a good indication for me to go long in the stock is 55 EMA institutional support above your 50% line, check 2. RSI is climbing up here, check 3. Rate of change here is flipping over the 0% line, check 4, right? Fibonacci's and all the other stuff. I think I already said that, check 5. I mean, there's a lot of other things here, but again, that's where I tell people you don't really have to big brain some of these moves here. It's just about being alert, understanding your time frames, understanding what's happening right in the market here, right? Again, when you're going index, right, sector stock, right, what index is moving, why, what stock, what sector is moving, why, and then what individual stocks and tickers are moving, right? That's why, you know, I tell people you don't have to get involved, you know, on a SanDisk or like a Western Digital here, right? Why? Because it's telling you right here, if you look at the chart here, were chips moving today? No, they weren't, right? All of them were down big today, right? Except for, I guess, for Marvel. And Marvel had news, I believe. I'd have to fact check that as well. But again, when you're going long here in stocks and or short, you know, usually when you're in the right sector, maybe SanDisk went up here. Maybe SanDisk is too expensive, so you can go here to Western Digital. Maybe Western Digital is too expensive, so you can go here to AMAT, right? There's different levels to this game, guys. And I'm trying to help you guys understand how you can tie it all in together. Okay? Macro, fundamental, technical. Write it down tonight. Another thing that people are kind of getting confused about today as well, right? You're seeing biotech go up here, but then why is healthcare going down? And this is a chart I like to show people too as well. There's all they do here, guys, is they trap you again and again and again, right? You can kind of see these insane wicks. You can't unsee them when you see them, right? So if you're on your 30-minute time frame, but obviously higher time frames are king, you can kind of see these distinct wicks here. I'm gonna try to zoom in on this chart. Can you see these guys? Right, you can see these distinct wicks, right? Usually actually really good telltale signs when, right, you shouldn't get involved in a stock here, or when you should get out. When you see this, guys, you really can't unsee it here. So I'm gonna go ahead and just clean off this chart here, remove all indicators here. Gonna go ahead and remove my lock here. You can see these wicks here, right? So there's a lot of different strategies. I'm not saying this again, this is a magic 8-ball. There's a lot of different things to take into account, right? You can get news on a stock like this that has a wick, and right, it just makes me look silly here, right? At a moment's glass, right, this could have been like a bull flag. You could have argued that. You could have argued right inverse head and shoulders, even though it looks very janky. I mean, it is one right, left, head, right. Again, you have to be creative with how you see chart patterns here. You had a bullish pin here, right? Then what happened? Bad news, and you broke down. Okay. But when you zoom in, and you kind of see these charts here. Just look at these wicks here. You can't unsee them when you see them. Look at that wick, right? And have you ever broken some of these distinct wicks? They're very distinct. Look at these wicks here, guys. They're very distinct wicks. Can you see that, right? Wick, down, wick, down. No different from how you have a wick down. So again, one of the things I like to preach here, right, when you have an inverse head and shoulders, here's your left, here's your head, here's your right, is the polar opposite of what? An inverse head and shoulders. Okay, left, head, right. But again, your head and shoulders can come in all shapes and sizes. It can look really wonky. It can look almost like a double top here, but it's not. That's a left, that's a head, that's a right. The definition of a head and shoulders, right, you have your left, head, right. If you break your head, it's invalid. It's going to turn to something else here, right? And within that bear flag right here, which is corresponding with the head and shoulders, maybe you have a double bottom in here, and maybe you're creating a micro inverse to where you break your head and shoulders. But again, that's why having your relative time frames here is very important. And again, going back here to oil, kind of tying everything together, really not much is going on, guys, here. So if you're feeling like, oh my gosh, I'm missing out on things, I really have to get involved here, I would just go here to this chart here. Again, I'm going to remove everything here, broke clean. And I'm going to go ahead and just go maybe to like the 30-minute here. Where have you gone here in the past? Let's see here. Where have you gone here in the past since July? So let's go ahead and do a price and date range here. In fact, I could just go for this. This is kind of ridiculous here. So basically from June 11th to here for 69 days, I like the number 69. Anybody else like that number? 69, go! Right? Hey, you've gone nowhere here. Right? So patience really pays here. Instead of rushing to the market, I really want people to understand that you don't have to day trade every day. You don't have to take leap swings every day here. You can just wait for right setups. The market's going nowhere, guys. But the only person that's going to go somewhere is you, right? If you're not patient. Patience pays. Having a lack of discipline doesn't. It takes money away. And I see that time and time again from a lot of different traders. Last talk I'll go over here that I'm looking at for swing here possibly is Adobe, but again, I'm being very cautious here. I'm not going to get technical from this chart. I'm just showing you guys why you don't even need technicals here. So if I just go ahead and just delete all these indicators off the chart here, which I don't need, right? What do I see here? The same pattern again and again. The same pattern again and again, like double bottom here, inverse here. It's an inverse head and shoulders here as well. Again, inverse head and shoulders, double bottom, kind of a weird looking arm extension, bullish pennant. You broke out here, massive engulfing candles here on a daily time frame. Again, same thing here, left, here's your head, here's your right, you broke out, you broke down, here's your left, here's your head, here's your right, broke down. And now we have an inverse head and shoulders again here. Looks very janky here. I can't find the left one over here, but if I were to go to a smaller time frame, I could probably find it actually right here. So left, here's your head, here's your right, broke down, weird looking bull flag here. Morningstar island reversal up here, just really great bullish engulfing looking candles right here. Now you're back up here, but again, just using your train of thought here from a macro, fundamental, and technical perspective here, right? What do you see? I see the same pattern here again and again. And one of my favorite stocks to show over time is Adobe. They get you guys again and again and again, right? They get you down here, no different from how they get you up here, right? They get you down here, no different from how they get you up here, okay? It's not different this time, right? It's just the constant rotation of the market where they keep telling you things are different here, right? But again, if chips are so bullish, why would you rotate off chips into biotech? That's the question you want to ask yourself. Okay, cool, we're carrying cancer. But what about the data centers? What about all this money we spent here in AI and have invested? What about that? That's the number one question you should ask yourself. For a market that's so bullish that needs chips, we need all this money, we need rate cuts for these companies, we need all these different things here. There's been so much money tied up in AI infrastructure, right, and spending, CapEx expenditure, that you have to ask yourself, right, two things can't be true, right? I'll leave you with this. We need crude oil here, but we have the straight close, right? And we just, and again, we're below the $300 million reserve, okay? Do we need chips? Do we need all of a sudden now cancer vaccinations? By the way, I think people people forgot here for Moderna here. This is the same company here that did what? What about that COVID vaccine, guys? Anybody take that? Probably gonna get dinged here on YouTube, so I shouldn't say that. What about the jab? Interesting how this is the same company here going up. Oh, you've cured cancer essentially. I mean, I know they didn't say that right, but there's all these different stats of how it's really helping. Just how you cured what? COVID. Did we even need that? So ask your question here, right? And two things can't be true. If this was so bullish here, we should be up in the 1,000%. So it should be like 1,000% move for the news that we have. And I think that's your tell here. All you're seeing right here is your short squeeze. Nothing more, nothing less here. So for me, I'm like, people got caught off guard, right? And now they're running. Now they're being forced to buy it back at a higher rate here and pay it back possibly the same day. That's margin calls. Two things can't be true. And that's what you see here in the market every time, which is where they get you again. And again, what's different this time? You have something life-saving. You had something life-saving over here. Then what happened to you as a stock? You got all these suckers in here, right? And then you did what? Rug pulled on them. Just like what? So far, just like SanDisk. So far, just like Coinbase. So far, just like Pfizer, right? You go on the charts, guys. It's the same chart again and again. They get you every single time, right? Failed drug studies for cancer stuff here. Wow, you're at 457 with no split. Now you're back down here. UNH, right? They get you again and again. Okay. Have a blessed day. Stay positive. Stay kind. Take care. Peace out. Hollow Point Trading.
It said chopping.
Yeah, I'll grab some calls here. You just need to be very careful. The IV is going to spike here, so oops. I meant to buy 25 of these. Okay. So I meant to buy 25 of these. I don't know, like, did it move? I have one here. So you need to be very careful when you're sizing. That's why I don't like sharing my screen anymore. I think people are not like trimming as I know people aren't trimming as you should. So anyways, I have my calls here. I grabbed these calls. Between me posting these guys, going back to my fucking brokerage, going to my other brokerage, then coming all the way back to the channel, you know, I have time to trim. Why don't you? So, you know, you got to run stop losses. These plays can be 5 seconds. I can't control the charts, you know, and they can be 5 minutes. They can be 5 hours. I don't know. What I do know is I'm going to go ahead in here and trim for $450 like this, right? We've all had time since I called it out.
MRVL plus 9.6, MRK plus 9.4,
So
LLY plus
contracts here
4.4.
left. Everyone should have been able to grab the fucking position. And I'm going to be a little bit rude today because, like, we need to fucking get it, right? I'm doing the fucking work for you guys. And we're not doing the easiest thing, which is what? Setting stop limits, which we should be doing, and trimming, right? I'm the one who has all the fucking stress, not you. It's me. So, like, you need to have a little bit of a reality check today, you know? If we're not learning, what are we doing? So, right, what am I going to do here? I'm going to do what? I'm going to trim more. Why? Because I already locked in now $700. Guess what? It's been 14 minutes after market open. Okay, I'm near my 50% line. What do you know about that? Big rejection point here. So you should probably protect your runners right here. Okay? I'm gonna go ahead in here because I know I have a lot of possible leeway to the downside here. Trim more. I have 3 contracts here. What can I do now? Leave my runners. Well, guess what? These runners are $600. I'm gonna go ahead and close these contracts out here.
Weakest, okay. AVGO minus 4.
How do I know that? Okay, actually
Weakest,
it worked out
AVGO minus 4.8, CRWD minus 3.7, AMD minus 3.1.
Okay, here we go. So it says I'm down. I really should be up here on these puts here. And your stop loss should be very tight here. You kind of have a fishtail. You can form a morning star here
minus
as well.
0.4%. Risk off.
And you have an undercut here, right? So what's an undercut, right? You undercut, like retest here, possible breakout here. So this is your breakout level. This is your point of control. If you're above your point of control, what does that mean? That means buyers, aka bulls, are in control. specifically just for this level here. Okay, so again, 715 is a critical pivot point right here. Okay. Oh, my back. Up.
Weakest, CRWD minus 6.9, AVGO minus 5.1, AMD minus 3.5.
I have my Humana chart loaded here. Let me just refresh it. Did my bot do its work, or is it tripping? Okay, it's tripping. Awesome. And again, another point here, contracts are not $500 here. So like, you know, again, what did I tell you guys? You can go ahead and, you know, go to a lower time frame. Excuse me, not lower time frame. Go to a lower strike here if you think it's going to hit 710 to trim these contracts here. These are only 10 contracts, by the way, you know. So, and again, if you have not gone above our opening price, which is where our opening price was where? Up here, and there's a sucker going short, long, you know, all the way up here. That's back holding. Now, do you think you possibly can come all the way back up there and retest? Absolutely here, but you have to kind of find that bottom. Where's that bottom? Could the bottom be now here? So how you strangle is this, right? So if you have calls to puts here, you have to find.
Moving now. Coin up 1.7 in 15 minutes. NFLX up 0.9 in 15 minutes.
You have to find the equivalent calls to puts ratio to make it make sense. So I have my 716 puts here. If you're going to buy calls here, right, it has to make sense. So, right, people are going to try to buy double the positions, blah, blah, blah. No, it's not how it works. So if you're going to buy calls here, right, look how this works. So where are the calls out here? So I just bought these 714 calls here, right? So the 714 calls hedge with your puts here, right? You want one of them expire worthless, right? So we have a volatile market where they both get smoked here. So if you actually have zero movement at all. So if you gap back up to opening price here at zero, these contracts will go from $2 all the way back up to like $500, $600 per contract, which would actually take out these contracts completely, which would be hilarious here. But if you want insurance, you're like, man, I don't know if I should cut because I don't know, he keeps telling me to, and I just don't want to listen, right? At least grab a fucking hedge. That's what I tell people sometimes too. I'm like, there's just no reason to just. It's not enough to like not pay attention, but the secondary thing is like when you're gonna grab a position or a 0 day, you literally have the actual option
QQQ minus 0.5%,
right?
risk off.
So just that's something you need to consider here. And again, full price target extension here. It looks like QQQ went all the way back down to whatever it's called. So excellent here. So I would cut these contracts here. Let me just check the chart here in a second. So you